Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. Artificial intelligence continues to have a ton of buzz in the market, but we're getting a little bit more information about what the future might look like, how rapidly this industry is going to evolve, and how it's going to play out, at least for the foreseeable future. So I want to dig into how I'm thinking about artificial intelligence, where we might see value, and how investors should be investing in this space. Because I think the answer might be a little bit counterintuitive. My name is Travis William. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content. And I want to start with some interesting stats. You may know that OpenAI's ChatGPT got 100 million users about 2 months after launch. But since then, we've seen the launch of Bard from Google, which is owned by Alphabet, and a number of other AI products. So if this follows the same trajectory as a lot of other AI products out there, Lexi would be a perfect example in late 2022. The growth curve was really, really steep, but the business wasn't all that sticky. So people canceled their subscriptions that they had with something like Lexia pretty quickly, and revenue went from about $1 billion run rate to far less than that over just the course of a couple of months. OpenAI is private, so we don't know exactly what's going on with their subscription business or how plugins are going. But I think what we've seen already is that there's going to be a lot of competition in a lot of these spaces. Even from a model perspective, keep in mind that some of these models are proprietary, but some of these models are open source. Even Meta has open sourced some of its models, not on a commercial basis, but they could in the future. So people are able to build on those. Models like Stable Diffusion are open source, so other people can build on them. So there may not be a lot of value in the model itself. The other big trend that I've seen is a stock like Nvidia going crazy on the assumption that AI is going to be a huge boon for the company. And I really want to caution investors to think about that really closely, because right now the training is done on Nvidia chips, the inferences are done on Nvidia chips, but all of the companies involved in AI, all of the big companies anyways, are developing their own AI chips. So that may mean that NVIDIA's chips are going to be replaced by somebody else. And remember, NVIDIA doesn't own the data center. It's companies like Microsoft, Meta, Google. They own their own data centers. So when they're making decisions about what sort of chips that go in there, they would love to be able to have their own custom design chips that are built specifically for their own AI models. That's what they would love to have in those data centers, doing those models, building inferences, performing tasks and inferences. I think that's really the way that this is going to trend, not that everybody's going to be buying NVIDIA chips until the end of time. So a lot of this hype cycle, I really want to caution investors from. The way that I'm thinking about this today is really, what companies do we have pure upside from artificial intelligence? So an example would be, what company can get more out of their programmers because they're using artificial intelligence? What companies can add new products because of artificial intelligence? Maybe a tool that bolts on to existing products. I think this is the way that Microsoft is looking at this, right? They're not introducing necessarily new products, but they're saying we're going to use artificial intelligence to make our Office products more valuable than they were in the past. Another example would be Dropbox. We don't know exactly what they're going to do with artificial intelligence, but people are keeping their data on Dropbox servers. So could AI both make their workers more efficient and also allow them to introduce new products? Well, that would be pure upside for a company like Dropbox. As an investor, I think artificial intelligence is still in the hype cycle. There's a lot of investors trying to figure out what the next name in that hype cycle is. But what I want to do is figure out what companies have upside from AI. I'm getting a value and a baseline level. And hey, if they do something in AI, then that's great. I think that's really the framing that we need to have, because a lot of the companies that are talking the most about AI are probably not going to be the winners long term. Remember that it was just a couple of years ago where everybody was talking about the metaverse and digital twins. Well, that didn't turn out to be much of anything. There was cryptocurrency. These hype cycles come and go time and time again. I think artificial intelligence is absolutely here to stay, but we need to think about a long-term time frame and what is sustainable and what's not. So is AI a fad? Absolutely not. I think this is absolutely here to stay, but it may not generate value in the way that a lot of people think right now. It may just be what we call a sustaining innovation, where companies use it to make their products better and more efficient, lower operating costs and development costs, basically make existing and powerful companies even more profitable. That's the way that I think this is going to play out. But what do you think about AI? What stocks do you have on your mind? Let me know in the comments section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. See you here next time.